Well, you devils, happy Friday. Sam here with you. Well, let's see, it's the 21st and about 1:15 here for me in Austin. Of course, we're going to get an update here on Bitcoin. I think we'll look at Bitcoin, Ethereum, and the S&P. Well, it's not the clearest Elliott count, but I think we've got there's probably 3 or 4 different alternates in here. I'm leaning into what I think is the simplest. Now, simple is not always better, but I do think we likely have one of two things happening here. So I'm over here. I've got a 2-hour on BitGet, right? Just a reminder. They are a sponsor of this channel, so if you're in the market for a new exchange, we can recommend them highly. Oh, and well, before I forget to do it, just a reminder, any of you that's interested in developing some Elliott Wave skills, geometry skills, all the things that we teach. It's really a 3-pronged approach to our methodology. Well, you can always join us for free. Just a reminder that gets you into white belt, and it gets you a few channels within the Discord. But if you'd like to be a more active member and really get into the full depth that's available to you in the Discord, there is now a monthly fee for that. Belts available for individual purchase. All right, there's my marketing. So what to do here? Well, it strikes me. I mean, this is hard to argue with this, right? So we got a pretty good impulse here into a proposed 1, and call it it's 3, right? So here's our correction. Now this is a bit of a cluster. So we don't get much of a 2. So if the 1-2 is down here, it leaves you a little bit of a guess here as to what's the best fit. So let me get this out of here. I don't think it really is as problematic as it might seem. Now, I know I've got a lot on here. Oh, let's see. Maybe here I'll take this off for the time being, just to kind of clear this up. So I've got both a traditional Elliott channel here, where we're just going to take the structure of the wave 1, and the wave 2, right? Very commonly done here, and then we'd be looking for some sort of intersection here potentially. Now, we didn't get the 3 that you'd be anticipating here, but interesting, right? So that we get this nice, it's always a little bit like what's the best fit here? Yeah, we get some pushover, but as we come back here now, testing from above, somewhat interesting. It's not surprising that we stall here. Now, nothing says we couldn't just flow right through that. Of course, the median lines are there as well, and the median lines give us, it's essentially another channel. It's just using slightly different pivots, although not dramatically, but different. But it gives us a different trajectory, a different angle. So as we're working that upper edge, now coming back towards the trend line of the channel, and then the median line gives you a reasonable target, and of course that's all in line with this consolidation, and you can see it over here in the volume profile. Now note, I'm out of log scale since we don't have the range that requires it. So tricky. I don't think it matters though for us as traders, right? If you're a bull, whether we completed here the 1, right, and now we go into the 2, or the alternate would be that this is 1, 2, and then we've completed another 1 here, and we'd be looking for the 3, 1, 2, 1, 2 of a bigger 3. Well, I don't think it matters here. If it's 1, 2, 1, 2, great. We're looking for the buy down here. If it's 1, 2. Right, it's just a function of degree. Which one are we looking for? I think. Let me back up here. What am I on? Let's go. Let's go out to the daily and open it up a little bit more. So here, as we look at it, here again, just emphasizing here that I'm not in log because I don't require it in range. Well, this is, we've been looking at this for. What was our low down here? Since November of last year, that the obvious supply was up here. We tagged it. Note, we got just on the other side of the discount zone. So we got into the premium, and that's where we start to sell off. So supply comes into the market. Very, very reasonable assumption. It certainly came in at the area that you'd be anticipating it. So as we come back down here, well, now you see here that, of course, I have the Sonar Labs tool suite on here. This is their SMC, their market structure, smart money concepts indicator. We work closely with them, recommend it highly. If you're interested in that, we get you a little discount. That is in our links below in our little link tree. Okay, now I'm trying to get off the marketing, but there it is again. Well, okay, so if you're looking at that, well, where would the obvious prior resistance, right, be? I mean, it's hard. How do we not say, well, that looks interesting? Well, look what we'd be doing if we were to come down here. We don't know whether we're going to do it in a 3 or a 5, or well, pardon me, what degree we're in right now. But let's just, for simplicity's sake, go about something along those lines, right? So we'd be right at the center line of the initial channel. We'd be at the outer edge of the median lines here that seem to be framing the market, at least currently. You'd be at the prior structure here, prior resistance, or coming back for support, and you'd be at a demand zone and a fair value gap and a low volume node. So I look at this and go, all right, well, whatever we have here, if we're going to start to correct, which is what, you know, bulls that have not participated here, or maybe are participating in some of the swing structure, but looking for that bigger, right? What are we looking for? We're looking for the 3. Whether it's we have the degree correctly identified here, or if it's 1, 2, 1, 2, it almost doesn't matter, right? Whoops. We're looking for. I need to do that. We're looking for the next big 3. So this, if offered down here at, call it 25.5, 25 and change, anywhere down here, this would be an area that I think you could be looking to add to your long positions, right? Or if you're not currently in the market, that would be a reasonable place to get long. Well, of course, the other factor here, if we're completed, well, we'd be coming into a 38. Shallow for a 2, right? And certainly we could go below it, right? We'd be getting the lower edge of the initial channel here. If I can draw it any further, come here. Oh, I locked it here. Hang on. Let's draw that out a little bit further. So if we're going to come down for a full 50, right? Maybe you're going to blow through some of this. Now you're going to have to get back through to the upside here, but this is all very reasonable here. 23 and change here, kind of the same thing. I mean, you can almost do it again right here. Prior, we stall. We're coming back to this. So, I mean, again, let's not try and be perfect. But this area here also, right? So we've got high volume. We'd be on the edge here of a low volume node here. Now, if we look at the entire structure, this is the Sonar Labs volume profile that's working off of this pivot low to this pivot high, right? Here's the whole thing. So anything down here is, again, going to be interesting. It's a question of your risk tolerance, whether you're trading with leverage, you know, where you're going to put your stop. My suggestion would be not trade with leverage. Or if you're going to trade, if you get the turn here, then perhaps. But if we're heading lower, you're going to have to take the stop and then reload down here. So that's just your own individual choice. But this here is, I will be very interested there. And I think that's, well, you know, you can kind of use your tools down here. All right, how do we look, right? If we come down here with this RSI, our Elliott oscillator, now the Gann high-low has all gone red, so all the pivots here now are being broken, are heading lower, so it's not unreasonable. This is what you're waiting for. This is where, you know, the comments that I get are amusing, right? So people are like, oh, you're missing the whole thing, right? And I just quietly remind them, like, the retracement will come. So here it is. Here's the retracement. Bulls wait for it. Now, the question is, all those people that, you know, it's so easy in hindsight. Now, as the market starts coming down, are you going to be able to step in and buy it when the market's coming down? Now, that doesn't mean that you just sit down here with a limit order, but if we're going to do it, maybe we get a zigzag and we come into this location, market's going to be coming down. Right? Can you step in? Well, you don't have to pick the turn. You know, as you've certainly heard me say 1,000 times, right? Something like that would get you back to the median line. It's not going to be the 3. That's likely the 1 of the 3. So right here would be the safest place to approach that. right? Something like that. Again, you'd be right back at the median line. Now, I don't have this, right? So we'll see. Now, what started here in this correction here, we're going to look at it in a second here, because if I can get you out of there. All right, what do we have going on? Well, it kind of looks like we've got perhaps a leading diag going in there. If I go down to a smaller time frame, let's try a 2 hour. Maybe, right? Maybe a 1's going in here. It's a little funky. Let's label it. 1, 2, 3, 4, barely. So it looks like some sort of a triangle. 4 into a 5. Now that's a little bit big. Let's clean that up if we can. I mean, it's close up here, no doubt. That's close on the overlap. Oh. Right, but man, do we get? I'm just looking up here, my other count. We've got it. 1, 2, 3, 4. A, B, C, D, E. I think you'd do it that way. And then you'd come down here for the potential 5th of 1. Let's take you up a degree. I'll put you in blue here so we can see it a little bit better. If that's the 5. Now, part of what's influencing this is this last 5 that we get up here. Now, could be, all right, there's a number of alternate counts here, but this is, while it's not textbook, and purists aren't going to like this, this is such a cluster here. And this actually, one of the members of my team, you guys all know and love him, George, GZ1968, who he would be on my list for most improved, right? He's a really hard worker. He came in without a great knowledge base of Elliott, but has worked really hard, and his skill sets improve. And I saw his interpretation here, so I thought I'd share it with you guys. Is it perfect? No, it's not perfect, right? But again, quit expecting Elliott to be perfect, right? So some sort of corrective action here. It's, what is it? It's corrective, but we're going sideways. So it's a great candidate for a 4. It's a sloppy triangle, but A, B, C, D, E, it plays, and then we come out of it with a clear impulse, right? The last 5 up is pretty clear. Excuse me, hard to argue with. But of course, if we put it in context, the whole idea that we would complete up here, well, okay, big extension in the 1, 3 shorter, 5 shorter, this contracting kind of move off of the low down here at, what do we do, 15.3. I think many, well, there is a bearish count here that we'll take a peek at, but I think many are looking at this thinking, oh, well, no way, that's the 1. And I suppose the alternate here is that you would, I think whether we're correcting, if this is the second 1 and we're correcting, well, then note where this would be. If we go off the low, that's a 38. If this is the second 1 and we go in here, right, now we're right back at a 50. So you're at the 50 from the secondary pivot. You're at the 38 from the dominant. Now, you're not going to pick up an algo here with the 38. But remember, algo does not care about your Elliott count, right? It's just going to use the dominant pivots. This is a secondary pivot, but dominant relative to this swing structure. So I can absolutely guarantee you an algo is going to fire here. Right? Just because it fires doesn't mean it gets its target, right? Could easily go down here. But so if it's a 2, anywhere in this range is going to be interesting. Now we get the golden zone in the 50 at the larger degree. So this whole pocket down here, that would be a heads up, right? Often I'm on here saying, well, it's not right yet. It's not time yet. Well, we don't have the zone yet. We can't see it yet. Well, here, time to pay attention. If offered, right? So approach based on your risk tolerance here. But if it's offered down here at 25 and change, I'm going to start buying. Now, that's just me. I'm not giving you financial advice. I'm as bullish as anyone you'll find. So if I see that opportunity, I'm going to start to accumulate here. Right? Again, not with leverage. I don't trade with leverage here, particularly off of longer term plays like this. I'm not interested. I don't care about the leverage. I'm looking for good positioning for something because I have no intention of selling it ever, right? Any of my I have no intention to sell any of it. Right? If I need liquidity, I'll just borrow against it. Okay, so 1, 2, 3, 4, we're not sure, right? Nobody has a lot of conviction. There is no Elliottian, there's no technician that has a high degree of certainty as to where we are here. Certainly with the Elliott count, it's a little confusing, right? I was almost tempted to say, let's leave it off, because you could do it you could really do it just off of, okay, areas of consolidation, expansion, the geometry. Is the Elliott helping here? I think still, whether it's 1, 2, 1, 2, or we complete it up here, again, doesn't matter, right? So anywhere down here, I'm a buyer. Excuse me, if offered. I mean, I suppose the alternate here is this would be a WX, A, B, C's coming in, right? So we don't know. It will influence what we're looking at here. If it's going to play as a 5, right? And you could see the possible WX, this would be the A, B, C. We'd have more to go. But if it's a 1 or an A, right? So those are the options, right? If it's going to hold as a 5 here, and we're going to continue to consider this as a leading diag. Well, if it's a 1, we're looking for the 2, 3, 4, 5 to complete the A at this degree, right? Now that would imply a deeper correction. Now, of course, I don't have any of this, right? We don't know where that's going. This could be, we could have another diag. We don't know what we have here, right? So we just map it out and say, okay, well, likely, excuse me. Sorry, guys. Likely either a 1 or an A. I'd be inclined initially to be thinking A. If we're going to hold here as something that's completed, whether it's 1, whether it's the 5 of 1. What do we complete here? Well, it's too soon to really call it. What are we looking for? If this starts to go, right, whether it's 1 or A, right? This is where the Elliott gives you an advantage. Sorry, supply demand traders, it just does, right? So if it's a 1, what are we looking for? We're looking for 3 on the retrace. Well, if it's a A, what are we looking for? We're looking for a 3. So whatever we're looking for here, we are looking for a push higher that does not go up and take out the high. Pardon me. I shouldn't say it that way. Because it could, in an expanded B, it could. But more probable, if we're going to come back up here, well, we can see where the resistance is. That would be a deep 2. But, you know, the unusual shaping here, the big extension in the 5th, if we're going to come back here to where the 5th started, well, that just kind of makes sense. Maybe you get something deeper here. But I'd be cautious about thinking, oh, it's 1, 2, and you're going 3 to new highs. It doesn't quite fit. Now, again, I'm not saying that that's not possible. I'm never saying that. It's just in the probability here, which is all we ever get. If we're doing something like this, now we might hold right here. There's the 618 of it. So let's see if we can put that together. Where would be the high probability location that we'd be anticipating? Wouldn't you anticipate golden zone here? What's the advantage if we hold golden zone? Well, then I know I've got an algo at my back, right? I'm in sync with that algo. Now that target's down here. Now would that do it? Well, not likely. If it's A, B, right? We're looking for something lower here. So this could be 1, 2, 3, 4, 5 of a C. We don't know. It's too much to project. So what do I see here? I've got a candidate for a 1 or an A. That's it. That's all I got. And I'm in the process of correcting either the whole move or the most recent swing low. Right? It's one or the other. So I get an advantage here. So if this starts to rally, I would be reluctant to be thinking this. Doesn't mean that's not what's happening. I mean, nobody knows what's happening. So all we can do is say, okay, well, this is a pattern I can identify. I've seen it. I know it. I understand it. So if we come back up here and I'm at a golden zone here, I'm not necessarily saying be a seller here. But if you're comfortable going both sides, now on that one, see, that kind of trade, I would be more inclined to go with leverage. Even though it sounds counterintuitive here. Well, wait a minute. You won't go long with leverage. You won't go long with leverage, but you'll go short with leverage. Yeah, because I don't want to be stopped out of any longs. If I get stopped out here, I don't care. Right? It doesn't ruin my day. I'd probably put it up here on the other side of that too. Let's see if we can put a trade together here. I'd be right on the other side of that. And my target's down here. There's 7.29 to 1 with a little leverage. Okay, well, don't go monster size here. No need to do it, right? With a little, that's the advantage of leverage, right? You don't have to put on such massive size. So you'd be going counter trend, at least in the higher degree trend. You're playing a pattern, right? With a high degree of reliability. Does not mean you're not going to get stopped out. But it's a reasonable, anytime you're putting on a trade with that kind of risk reward that's grounded in solid TA, pattern recognition, an algo play, a 5 followed by a 3, right? You want to keep it, Elliott for dummies. There's no reason not to go there. Again, why would you not take that trade? Oh, I don't short Bitcoin. Okay, well, I understand it. Well, then if you don't short Bitcoin, as I rarely do, if you don't short it, okay, well, then you're just in hurry up and wait, because the thought process, well, I suppose you could go long here off of the A if you got to start here. If you're a long only, and we have some, I tend to be long only with Bitcoin. What you could trade the C of the B or the 2, either one, right? So you trade from here to here with that as a target. Again, go with leverage. Put a stop on it, but you could do it with leverage. And just as a reminder, for those of you that are in our purple belt or interested in going with a purple belt, if you want to pass that test, the only trades we allow you to take are 3s and Cs. But that could be the 3 of a C. Right? It was one on a 2-hour. You go down to a 30-minute, you might be able to get into the trade the 3 of the C, and then again you go with leverage. But if this starts to come down, okay, okay, is it A, is it B, or is it 1, or is it 2? We don't know. Doesn't matter. Doesn't matter until we get down here. Okay, now what is it? How are you going to know? You're not going to know until you see, do we get a new low? If I get a new low, okay, well then probably it's 1, 2, 3, or A, B. See, here, if we get this, is it 1, 2, 3, 4, 5, or is it A, B? Well, it's a question of what do we get here? Here, I should probably do it correctly. If it's 1, 2, are we going to get a 1, 2, 3, 4, 5? Okay, we'd have a candidate here for a zigzag, A, B, C. If we're down here, well, I'd be interested, right? So you'd have a reasonable pattern recognition here. We could say, oh, A, B, C, I got Canada. I'm right back here, right? We put it back together, right where we were talking about being a buyer. Now I gotta get this so I don't confuse you. Well, probably let's pull it off like that. 3, 4, 5, A, B, C. Candidate for a 2. How are we going to know? Right? How are we going to know? We'd have all the ingredients here for the 2. If it's 1, 2, 3, how are we going to know? Right? What do we get here? Right? Do we get a 4? Right? We could get something like this and go down for a 5. Right? We'll use a triangle. 3. This would be the internal 1, 2, 3, 4, 5. So this would be at a larger degree. Here, I'm screwing you up here. Probably. All right, so I'm just showing you the possibilities here. Let's not assume a zigzag. So 1, 2, 1, 2, 3, 4, 3, 4, 5. Well, if that's the case, what are we thinking? We're thinking something deeper, because now we'd have a completed impulse. So you'd be thinking A, B, C. We're going deeper. We don't need to go there, right? So this is just the process of, okay, what are the scenarios? Because if this, then that, which is the advantage of Elliott, right? There's nothing else like it, right? If it doesn't do this, then it's likely to do that. And if it doesn't do that, then it's likely to do this. Emphasis likely, not with certainty. There is no certainty in the market. Quit looking for it. All right. And don't expect Elliott to be perfect. Are these perfect counts? No, they don't need to be perfect. This is your GPS, right? All right. If we need to recalculate and reroute, we do it underway. Welcome to trading. There's no certainty here. No certainty. You have to embrace it. You have to breathe that in deeply and acknowledge there is no certainty in the market. So you can't look for it. Oh, if anyone says to me, "Oh, I know where it's going," oh, I just laugh. I just laugh in their face, right? No, nobody knows where it's going. Okay. All right. Let's finish up here. Again, I don't think it matters here. Whether we're correcting this swing or the entire swing, we're correcting. Only question is, what pattern is it going to take? Where are we in that process? And then if you're looking for that correction to complete down here, well, it'll be interesting to see where we are next Friday. Or if we're visiting this, now we're doing live streams every Wednesday. Are we revisiting this on Wednesday? Probably revisit it. I'd guess that members will be curious about this. So we probably give this a revisit on Monday. Let's see, are we progressing or did we do this? Certainly, there's no obligation for the market to do anything ever. It could certainly do that. It'll be interesting to see. So it's getting more interesting, right? The opportunities are presenting themselves. This is the one that I will be watching for down here, mid 25s. All right, I think that does us there. Let's go over to ETH. ETH, I think, is a little more difficult. Now, if you went with a similar thought process here that we've completed, we got a 2. Well, this is a cluster F. Well, if you were trying to do something similar to kind of match that structure of Bitcoin, you'd think 1, 2, 3, whatever. I'm on a 4-hour here, some sort of ugly triangle in there. Again, see, it's not as important to me to get every little swing identified here. Whatever we did here, we consolidated and went sideways. Now, what's problematic here is we don't get a good finish. We got a series of 3s. There, you could probably make a case that there's a 1, 2, 3, 4 little squirt up there for the 5, but I don't think anyone has a whole lot of conviction in this. I suppose wild card is it's some sort of expanded B. This one I'm a little more reluctant. That's I call these penciled in. I don't know what we have. So what I can say again, I don't get caught up in like shit. I don't know where it is. I don't know what we've got here. The market will reveal itself as we find out, right? As it reveals a little bit more. Here's the last structural pivot, right? Are we correcting? Right? Again, it's a swing low to a swing high. We're now internal. We can go internal and go external, or we're going to go external down here. It's a swing. This is the correction. Where can we anticipate this correction to go? Well, again, if you were gun to your head, right? Let's pull it this way. And you had to pick, wouldn't that be the most logical spot? Where you could just use the market structure here and say, well, shit, that Elliott count's a little iffy, but if we're coming back down, let's see if we can put it together here. If we're coming back down, wouldn't this be a reasonable location right at the 50, right at all this structure, the consolidation, you're right on the edge here, where you're going back into value? But this count is iffy at best. I don't know. I have very little conviction in it. But I don't care. Swing low, swing high, I'm making an internal correction. I can see with clear eyes, right, where that structure is. And it's technical. Does that mean that we're coming down here? We're just going to, do this? Certainly, we could come deeper and get the edge of the channel, right? That would be your golden zone, right? Now you'd have that. Well, what else would you have there? Well, of course, right? You'd have a golden corner. Right? How beautifully that plays. If that's the case, then I'd be thinking 1, 2, 1, 2, and this is a hideous looking one. But if we all that matters really, if you're an Elliottician here, if you're a trader first and a technician second, I've got a swing. I'm waiting for the retracement. I think that's something that we get a lot of that, right, amongst our members or students. They get so caught up in the analysis, they forget to think like a trader, right? What is the trader really focused on? Okay, right, I can see something that I can identify here. I have a little conviction. What the trader's focused on is not so much how technically precise the Elliott count is or any of the TA. The trader is concentrating on what's the risk reward. If I'm right, what am I making? If I'm wrong, what am I losing? And then what's the true discipline of the trader, which only comes with time. Very few are just born like this. The discipline is to take the loss and not do this. Oh, it's going to go a little deeper. Oh, I'll give it to that bigger channel. Oh, well, maybe down to the POC because I don't want to get stopped out, right? Nobody wants to get stopped out. I hate getting stopped out as much as you do. But you have to be at peace with it, right? Everybody wants to be right. If I'm going into a trade, I think I'm right. Although your first assumption should be that you're going to be wrong, right? Because that you'll be right more often than not, right? So what is the key point? What's the risk reward? Is there enough reward to offset the risk? That's the trader's thinking, right? The analyst, wants to get the count right. Those are two different skill sets. Don't confuse the two. Just because you become a good analyst does not make you a good trader. That's a completely different skill set because it's more based on emotion. How do you manage your emotions, right? Market's screaming down here into a golden zone. You got to do the opposite of what your emotions are telling you. It's like, holy shit, it's coming straight down. I can't buy it. which is why I always suggest you wait for that first little retrace, right? Wait for the higher low. Do I get it? Do I get the higher high? If not, right? Oh, we're going down, right? Can I get it down here? Oh, all right. Am I going to try again? Right there, right? You never need to pick the turn. Yet people just continue to do it. They continue to look for it. I guess, looks good on your Twitter feed. Think like a trader, right? This is what the trader's focused on, right? I always say it this way, right? The analysis, that's the fun part. That's who can solve the puzzle. Who gets all the pieces just right? Now, if you solve the puzzle, you can solve the puzzle and still fuck the trade up, right? And just screw yourself because you're not a good trader. You're not focused on the trading. You're not focused on the money management. You get so caught up in, I got it, I nailed it, it's a WX upside down, reverse pineapple squeeze. Okay, it's great. So you were able to put the puzzle pieces together, but did you trade it? Did you trade it like a professional? Right? Or did you trade it like an amateur? Oh shit, I'm up $300. I'm taking it. Right? And then right, you had if we get this, I don't have this, but if we were to get that, that's 80% probability. Why would you oh shit, I was coming into that resistance. I got scared. Right? Scared money never profits over time. Never. Right? You want to have a healthy respect for how quickly the market can take from you, but you can't be fearful in here. You got to take the trade and put your stop on it and then relax. Relax. You've done all the work, right? Now let the market do the work. Your job is done, right? Now your job is to keep your hands off the fucking mouse because you're going to be tempted. Oh shit. Oh man, it's up. Oh, there's the midline. There's 100 reasons to take the profit early. 100. If you can't resist it, oh god, it looks like it's going to pivot. There's an order block there. It looks like take a partial. Take a partial if you just can't stand it, and recognize that's part of your makeup as a trader, that you can't stand letting them run. It's hard to do. I'm not saying it's not. I'm not saying I don't deal with the same issues. I absolutely do. But it just comes from years of doing this. If I can't resist it, I'll take a partial. Because if this is the pivot here, if it were to be 1 2 1 2, whoa, we're looking for 3, right? So, you can talk yourself into it. And you say, oh, I figured it was the 1 and the 2 was coming, so I was going to take the 2. Well, are you going to take the 2? Right? Oh, I just made $500 here, so boy, I don't want to give it back. So I don't know, I didn't want to take it, and that's what comes, right? Then the 3 comes, and you're not on board. Again, if you're in our purple belt, we're not going to let you take that unless you're taking the 3 of the 1 or the C of the correction. But you can take this one, and you could. Here's a little hidden benefit for those of you. Well, some of the members know this. If you're in the 3 and you're in your purple belt, and you can take the 3 of the 3 as an add-on. Right? Because now you're just trading 3s. So you can take the entire, let's do it this way. You can take the entire wave as well as the internal 3, right? So you can double up, right? And get a bigger hit there. And that's not just about purple belt. That's about how do I trade this? How does a trader using Elliott Wave here, if we get any of this, how do you maximize? Where are the money waves, right? I want the big 3, but I want the 3 of the 3. Something to think about. All right, well, this is kind of the same thing. A little bit of hurry up and wait. We're starting the correction. Where are we going? Don't know. Don't really care, other than if we as long as we're not putting in new lows, as long as we're not doing this, I'm just looking for the next buying opportunity. Don't worry so much. It's a funky count. It'll reveal itself over time, right? We can't get it exactly right now, but here's what I can get. I've got a swing. I'm making an internal retracement. I'm looking to get an algo. I'm looking to just duck in behind an algo. Let them do the heavy lifting. All right. Hey, geez, I'm moving fast. It's unlike me. I'm not used to being this far along. Okay. Here's the S&P. Well, this is definitely a tricky count, right? Because there's so many possibilities. Now, we've looked at this last couple of weeks here, so just a quick review. It's very tempting to think it's a 5, but if you're applying true Elliott here, and I was a little sloppy a couple of weeks ago and got called out on this, it is tempting to just call it a 5, right? Because there are 5 dominant swings. But for an Elliottician, we don't get a true leading diag because 5 is not longer than 3. 3 longer than 1. So then you would start thinking about your combination. So can I do it this way? There's probably 3 different ways to do it. with the bigger piece of it is this piece, right? There's a very clear zigzag here, right? Very clear, right? I don't think anyone's going to argue with that. I got a 5, I got a 3, I got a 5. Now, what do we do with the first part? Well, you could do it a couple of different ways. But I think the cleaner is to go X, A, B, C into the Y. And that would leave you here. It gets a little tricky here. I think this is starting to play better. 1, 2, 3, 4, 5 into an A here. Then we get a flat. All right, so I'm going to go A, B, C. It's clean enough here. And then it looks like we're going up. We're trying to get, there's one more little push here. Maybe one more little push up here, right? To give you that structure up here. Oh, shit, I didn't mean to do that. Bring you down here. Something like that to get a C, to get an X, right? Which would imply, oh, okay, if we start down here, something like this, now we're going to come down and get the ABC, because if, heavy emphasis, we don't know if that's an X. We're looking for a 3 to come down. Finish it. W, X, Y, X, Z. Right, and getting this done via the A, B, C, then we come down again. So for traders, right? I guess that's my theme today. We're thinking like traders. Oh, I never have a theme when I start, but they seem to just, it's like songwriters just sit down, they start noodling on the piano or on their guitar. All of a sudden, a song comes out. That's kind of how I approach these videos. I'm not really sure what I'm going to say, but it kind of comes to me as I'm going through it. So as we look here, there's a couple things to note. Well, so pretty hard to miss that. Like, wow, there's some reason we're getting stuck right here. Why? What's going on here? Is it the pivot? Is it the demand zone here? Why? Right? Why can't we go any higher? Or what's the resistance that's holding it back there? Well, you know where I'm going to go with that. What would you think is there? Right? How many times are we going to hit it? All right, so here's that perfect zigzag. Now we retrace. What do? Golden zone. Not just in the ballpark, to the tick. So is there an algo there? Where's that algo's target? Right? Yes, we know there's an algo. We don't have to wonder about it. We don't have to if, maybe, possibly, could be. We know it's there, right? Where's this target, right? Again, something we don't need to wonder about. So if this is going to go A, B, C, we're down here at 3,200, which has long been a candidate. Now, the other thing to look here, there's a bit of a wedge pattern here that does seem to be going in here if we're going to get this to continue here, and we go up here and we get that perfect geometry. Now, to get that, you're going to have to clear that 65, which is no small task. But it would play, and we could go back here. Remember, algo doesn't care about your Elliott count. That's the last one it has to clear. So if this is going to come back up here, and we're going to get this push, right, to get that done here. Well, we probably see it in here. It might give the 1, 2, 3, 4, if that's what's going to fly, right, into this higher golden zone. Now, look, right, it starts to make interesting sense here. So we get a prior swing high here. So that's the strong high, because that's the last pivot. There's an order block that would have gave you breaks of structure on the way down. So we have this candidate here going in. Then additionally, I'd be drawing some. Come out of there. Got a nice tight little channel in there. Yeah, come here. Looks pretty good in there, right? So now remember Al Brooks' teaching here is right. So now if we get the break, that doesn't mean we just broken the trend line. The implication is there'd be one more little push to get that to complete up here to give you that X. Maybe you get a little throw over on this trend line up here. That would be an area. Okay, now thinking like a trader, am I going to short the market up here? Well, probably not. I'd probably do it with options. Why? What is the risk reward if I can get it to play? Here, let's use 707. Let's use 707. All right, so maximum, right? If you're trading this with options, you give it a little bit more here, right? So, okay, I'd give it to the other side of the 707. So what have I got here now? 8.7 to 1. Right. I mean, it almost doesn't matter if you're right or wrong here. Do I want to be right there? I'm very likely to take that trade. Do I want to be right here? Of course. Everybody does when they go into the market. You don't go into the market unless you think you're right. But I'm not going to put on so much size so that if I'm stopped out, it's going to ruin my week, month, or year. It's, again, you got to look at it and say it's just another trade. Now, that's off the daily chart in the S&P. That's a big payday, right? Monster. This one trade like this, right? I know you're careful with the language here, right? You don't want to get into that lottery mentality. Well, if I just buy another ticket, sooner or later I'm going to win. Well, okay, I'm sensitive to that. But the idea here is not, oh shit, I hope it goes because that's going to make my year. The idea is this a well-constructed trade? Is the risk rewards enough here to warrant putting money at risk? Can I structure an option trade? Well, there's all sorts of ways you could do that. I mean, shit, you just buy the puts. You can get fancy, right? A lot of different ways you can put on that would be a very bearish bias here. A lot of different ways you can offset some of those costs. The simplest thing to do is if the market is climbing into that golden zone here, well, puts are going to be less expensive. You probably buy at the money. Monster, but you're going to need to buy enough time because that could be, that could be the other end of the summer before you get there. Right? That's the trade-off, right? If you're just buying options, well, you're going to have to buy something with enough time, so you're going to have to pay for it. What you don't want to do here, I mean, it's such a big upside here. You could do it. It's up to you. If you just buy an at the money put and then you go, even 3-4 strikes lower and you sell the other and you got a little spread and then it does this, whoa, did you leave a lot of money on the table? But remember, it's not likely to do it in a straight line, right? We'd be looking for an ABC. So there's going to be all sorts of opportunities here. If it does this, right? If, oh shit, maybe that comes a little lower. Maybe that's a little higher. Are we going to get something that big? Well, I wouldn't bet against it. Here's how can I do it? Here, I think we could do it this way. If we use the height of that wedge, this would be a reasonable first target. To go beyond that would be, how am I going to do that? I guess we'd do it this way. Can I do this? I can come here and come up here. That would be 100%. So if we're going to go deeper, we'd get the 1618 would be down here at the target. But if you're in options, you're going to need to buy a lot of time here. So that may or may not be, you've got to structure it based on, let's just using what I'm here is August, September. So you're going to buy, what are you going to buy? September options here. You're going to pay through the teeth for those. So what you might want to do is sell some out of the money call spreads up here to help offset the cost of that. And implied in all of that is that if we break higher, you're out at the 707. You're going to lose on both of them. Right, so don't put on a 20 lot. Right, put on if your account size is appropriate, put on whatever's appropriate for your account size. But if you put on something that's sizable here, or you're investing enough capital to sustain that over time, and you're going to have to pay for that. Well, if you sell some out of the money calls to pay for the at the money calls, well, the other option is once it starts to go, then you could sell some out of the money calls. I don't want to get into a whole option thing, but do you see the conundrum there? I mean, if you've got to wait until September for that to get there, well, the other choice is you would buy something here, you'd trade the A, wait for the B, and then trade the C. Right? Again, if you want to get our purple belt, you can only trade the C, but remember, if you want to get a little extra juice in that, you could trade the 3 of the C, and you could get extra bonus points by trading the 3 of the C, right? Just like as we did on the way up, right? You can do the same thing here. Trade the 3 of the C, and then you get extra bonus points, plus you'd get extra revenue from your trade. So you got to think about this, right? Options make you think because you're fighting volatility, time decay, delta, gamma, all of the things that make options so interesting. And now as we see the volatility in the market, which doesn't show here on the daily, but if you're looking at a 15 or a 30-minute chart, it's tail wagging the dog now, right? It's all about the option trades. We have big expiration today, so all that volatility that you see in the market, I'm just peeking over at the other machine, all that volatility is just about options, right? It's just, are they buying calls? Well, If they're buying calls and the market's going up, then market makers are hedging. They got to buy futures. If it's going down, then they're laying those off, and then people are buying puts. It's a nonstop battle of market makers trying to stay neutral and then playing with $1 trillion of zero DTE options that are trading every day, right? It just changed the market. And it's not going to change anytime soon. You can't fight it. You got to just adapt. So there we go. I think that gives us enough here. All right, I hope you guys get something out of these. A reminder, we'll be back to look at these longer-term swings and just kind of apply the TDU methodology, right? It's not just Elliott, it's not just algo, it's not just geometry. It's all three combined together. That's what makes it a methodology and not just TA. Again, focus on this. This, that's the fun part. This, that's the hard part. Okay, guys, with that, I'll wish you a good weekend, and I'll catch y'all. Let's see, when am I back? We got for this group here on this channel, I'm back on Wednesday for a live stream. Okay, guys, have a good weekend. We'll talk to you later.